What is up, everybody? It is Rob here coming at you with another video. And it's been a little bit. It's been 8 days since I posted my last video. And as I warned you guys right before, I said coming into the end of the year, I was going to slow everything down, right? The stock market cools down, right? You don't get a lot of news. Everyone's going on holidays. And then once the new year picks up, right, that's where you're going to see a lot of your movement. And that's been exactly what is happening. If you look at the S&P 500 ETF, right, the last month we've basically been trading sideways, right, from the start of the month until today. Now there has been some volatility in the middle there, and right, you just saw about a week or two ago, right, we did see a big move down after Nvidia earnings, and the move right bounced right back up. So like I was telling you guys, right, the move was basically pointless. It was just a little bit of volatility. You had short sellers get into the market. People panic sold, and it was all over nothing. So that's the stock market for you, though, right? Emotions run high, and you got to keep your head lined on straight. But as I was saying, guys, right? I usually post my nightly watch list video, and I haven't posted one in a little bit because, right, the market's cooling down. But today was a big, big day in the market, okay? The Federal Reserve did just lower interest rates by 0.25%. Now, the Federal Reserve, they control short-term interest rates, right? And the term, right, the rate that they control is the federal funds rate. And what that is bleh. So they can, banks come to them to lend money, okay, and it's overnight. So the Federal Reserve goes, okay, well, if you want to lend money from us, if we're going to give you money overnight, we're going to charge you anywhere from 3.5% to 3.75. Now they set that short-term rate, and then all the other rates, right? As you go longer maturity, longer further out, well, that's set by the market. And with a normal yield curve, you always see longer term rates should be higher than the short term rates. Okay? So what the Federal Reserve did today was, right, they lowered the short term rates, right? The rate to lend money overnight, which thus affects all the other rates, okay? So they came out, lowered it by 0.25% to 3.5 to 3.75%, and they signaled a possible pause. And they only project 0.25% cut right now in 2026 and 2027. So as of right now, okay, you're not really going to see that many more cuts, but anything can change depending on what's going on in the economy. And at the same time, right, we are going to get a new Federal Reserve chairman. Jerome Powell will be stepping down, and President Trump will be appointing a new Federal Reserve chairman soon. So, right, we are coming into the end of the year where things have slowed down. Right, the past month, right, basically traded sideways with a little bit of volatility after Nvidia earnings. But besides that, right, that is what we have. So that's why you haven't been seeing a lot of my nightly watch list videos, because I'm relaxing, right? We've worked really hard this year, and I do plan to put out a long-term portfolio recap where I'm going to talk about, all the moves we made during this year, why we made them. You guys are going to be able to see the long-term portfolio, everything we bought, right? What the price is at, our return since we bought it. And I'm really looking forward to that video to show you guys our long-term portfolio. So be on the lookout for when I post that video. But right now, guys, I just planned my, trip to Vegas. I'm going to be going there on New Year's and partying. I'm going to be going out before and checking out some national parks. So it's going to be a great, great time. So right then, yeah, I always take this time, right, to cool down. We've all been working hard, take some time to rest, right? Everyone's going to be on vacation. Things are going to slow down. So enjoy the times, enjoy the holidays. But let's get into some news, right? We did just get the Federal Reserve cut, okay? So the market loves that because that means companies can borrow money for cheaper. So what does that mean? Well, if they can borrow money for cheaper, that means they'll have to pay less in interest, which increases their profitability, or at least allows them, right, to borrow money cheaper and use that capital to go do things. Maybe it's grow their business, buy a new warehouse, right? Do whatever with the money. So the stock market always loves interest rate cuts. But at the same time, you got to think about it, right, as a dual investor. You got to go, well, why is the Fed cutting interest rates? Well, they usually do that when the economy is contracting, right, to spur the economy. So you might go, well, the Federal Reserve is cutting interest rates. Doesn't that mean they think the economy is doing bad? But at the same time, the stock market's going up? Well, right, that's always the way you got to look at it because coming into 2026, to be determined, but maybe it is the year, right, where you get that big, economy crush. But that is to be determined. And no one has a crystal ball to be able to predict the future that far out. And that's why everyone looks at the data, right, as it comes in. And you always see the market react, big moves, right, when data comes out. Because that's how the stock market works, right? We follow information, okay? Yeah, everyone speculates and makes predictions, but at the end of the day, the data is going to tell you what's happening, and that's how you have to move. So, big news, guys. I did just add a new holding to the long-term portfolio, and it's going to be the last addition for 2025. Now, the name that I picked up, right, at the end of the year was Procter and Gamble. Now, you might be asking me, Rob, I thought you were just talking about, you had all these other names in mind, right? Constellation Brands, Chipotle, Humana, Nike, right? All of these names, right? If you watch the previous watch list that I've been calling out, well, you're right. But all of those names had a huge move up since we got the long term deposit. So I wasn't going to add to those names when they all made a move up of 5% or higher, right? Because they can all give it right back up. So I'm not going to buy into that premium. So I wanted to add, right, a new name, okay, that I think is going to do really great heading into 2026, and it's Procter and Gamble. We got it at a 3% dividend yield. So just for holding the stock, we're going to get paid 3%, okay? Now, what I wanted to talk about with Procter and Gamble, why I like it so much, right? Well, with the Federal Reserve cutting interest rates, well, that makes bonds and US government debt less attractive because you're going to get less yield or less of an interest rate. So you got to think, well, where can I take my money and invest it, right? In other asset classes. Well, one of those areas could be dividend stocks, right? Well, if the Fed just cut the interest rates, well, I could go into the market. I could buy Procter and Gamble, get a 3% return, right? Obviously more risk than US Treasuries, right? Potential downside move. But I could go in there, get a 3% move, while at the same time the stock has been beaten up, right? It's at lows. If you look at Procter and Gamble, for the past 5 years, right, the stock is only up 2%. So we were able to get into the stock at a 5 year low, which is a criteria that I love, right? I never really am buying stocks at highs unless, it's a rare occasion. So I love buying lows. Procter and Gamble hit us with that. We're buying it at a 5 year low, a 3% dividend yield, which I love on this name. And I love the brands. I mean, if you look at Procter and Gamble's portfolio, right, they have baby care. They own Pampers, okay? I'm just going to start listing off these brands, but you use them all the time, okay? So Pampers, right? Bounce, which is the dryer sheets and fabric care. Ultra Downy, Gain, Tide, right? You heard of Tide Pods. You've seen the commercials. Everyone uses them. Tide, Bounty paper towels, Charmin toilet paper, Puffs facial tissues. Then you even go, they even are in feminine care. They have Always brand, which is, feminine tampons and pads. They own Tampax. And then for men grooming, they own Gillette, right? The razor company. They have Gillette Venus for women. Hair care, they have Head and Shoulders, Old Spice, Pantene. Home care, they have Cascade, the popular dishwasher detergent brand. They own Dawn, dishwashing liquid, Febreze odor eliminator, Gain laundry and home products, Mr. Clean magic eraser. They own Swiffer, okay? They own all of these brands. I mean, I could keep going and they're just going to blow your mind. Look here, Oral Care, they own Crest, Oral-B, Scope. Um, they own Clear Blue pregnancy tests. They own Prilosec, Pepto-Bismol, Vicks, Sleep Aid, ZZZ Quill, right? Ivory soap, Olay, Secret deodorant and body spray. So all of these brands I just listed are household names that I use and are top brands. And one of the reasons you might ask, well, Rob, if, you're naming all these great brands and have such a great stock, then why is it trading at 5-year lows? Okay. Well, the answer is, as we know, right, the reason why the Federal Reserve has cut interest rates is because we have been seeing a little bit of a contraction in the economy, right? Households are, tight on their budgets. So all the names I just listed off are, name brands. And we've been seeing a lot of consumers shift, right, their purchases to non-name brands. For example, maybe go in to Costco and get the Kirkland brand. Maybe go into Sam's Club, right, and get the Member Mark brand. So you've been seeing a lot of non-name brand purchases that are cheaper. But, right, when you get a name like this and these products that are name brand and you're able to buy them at a 5-year low, that is absolutely what I love to do. And a 3% dividend, which is great. And you'll be able to hold that stock, get that yield, and eventually, when things turn around, buy the company either through cost cutting efforts, right? Maybe they raise prices, maybe consumers, come back to these name brands. You're going to see a big turnaround. And I also love pairing this with another name in our long-term portfolio, and that's Pepsi. I added Pepsi to the long-term portfolio, and we got over a 4% dividend yield, and we timed the bottom on that entry perfectly. And the stock moved up big time, and I was never able to add to the position because it ran up so much, and I didn't want to pay the premium. So I was able to add another, right, big name just like Pepsi at lows at a 3% dividend yield. So, we've been building out, right, the value in our portfolio this year. And that's exactly what you want to do when growth stocks are running up. Because you've been hearing, right, everyone, AI bubble, AI bubble. Look at Nvidia, look at Google, look at all these names. Well, when everyone's focused on that, chasing those returns, you'll see a lot of yield, right? Yield in names, dividend payers sell off. Because people aren't going to be interested in these names when you could try to go play the AI game and make a bunch of money. So that's the exact time you want to buy these names, okay? You want to buy the dividend value names when they're down, all right? And you usually see growth pumping at the time, and then vice versa. Eventually, we'll see a lot of those growth names take a big hit and sell off, and then our value names that we've been buying are going to go up. So it's a balancing act. And, the past couple of months, that's exactly what we've been doing. Now, I will cover a lot of this more in the long term, 2025 breakdown video. But for right now, I just wanted to give a little glimpse or explanation into the reasoning. But, Procter and Gamble, right? All those brands I listed off, you guys use them, you love them, you buy them. Big, big name. And I'm happy that we were able to get, right, this at over a 5-year low. So, what I wanted to talk about, right? I am going to talk about this. I keep bringing it up, right, in the long-term portfolio video, where I'm really going to talk about this. But I'm going to sneak it in here because if you're still watching this video, you do deserve to hear this. I want you guys to check out this website called Slick Charts. Now, I'm giving you this little tip before anyone else is going to hear it on the long-term portfolio video, but Slick Charts, okay? Go to that website, start looking around, and look at the S&P 500 component year-to-date returns. Now, this is a great way where you can see, all right, the performance of all the S&P 500 stocks and see which ones are the worst performing on the year and which ones are the best performing. Now, I'm going to leave that there, but guys, that's everything I have for you, right? The Federal Reserve just cut interest rates. We added Procter and Gamble to our long-term portfolio, and I got in at a price of $143.81. And as of today, the stock closed at $140. So as of right now, right, we are a little bit red on the position, but nonetheless, hey, if it wants to keep coming down, maybe it gives us an opportunity to add even more, which I love. I hate when I get into a position, I do my starter, position, and the stock flies up. It's always a beautiful feeling, but at the same time, it's bittersweet because we can't add more at that time. But I got in at a price again, 143.81, and wanted to share that with you guys, right? Stay locked in, right? And rest too. We're coming into the end of the year, right? I'm going to Vegas. I'm going to be enjoying that. I hope you guys have wonderful, wonderful holidays. And if anything big comes up, I'll come back online, tell you guys what's going on. And I cannot wait for the long-term portfolio video. I'm excited to do that. But for right now, guys, stay safe out there and peace.